Bitcoin has just broken $23,000 for the highest price that we've seen in months. And even from there, we could see an additional 5 to almost 10% moves up from here. However, there are some things you need to know about before making any moves. Let me show you. How's it going, everyone? My name is Jake with Trade Confident. And as I just said, this is the highest price. We have broken a psychological level at $23,000. This is really exciting to see and very good for the crypto market in general. Right now, what you're looking at is Bitcoin USD on the 1-day time frame, and I'm using the TC top and bottom finder, price versus money flow, and trend exhaustion indicators for my trading. What I'm seeing right now is a possible short squeeze in action. It could be happening literally right as I'm talking right now, and here's what I'm seeing overall. The trend exhaustion has dropped drastically, and for those that don't know, the lower the trend exhaustion goes on its chart, the more likely it is for the price to begin moving up. And as you can see, that is already happening. On top of this, the price versus money flow has dropped significantly. It's dropped from 95 to about 70 for where we're at right now. So this is a total of 30-point drop on the price versus money flow already. Now, typically when you see the price move up while the price versus money flow moves down, this is often indicative of a move down. And that's one of the things we need to be mindful of. But at the same time, this also gives the price versus money flow a lot of room to continue moving up if need be, in order to compensate for a short squeeze that we may be seeing in the market right now. The combination of these readings with trend exhaustion low and price versus money flow and seeing the active candle moving up, I mean, we're watching it move up as we speak. I started this video and it was at 23,000 exactly. It's already up another 250 bucks almost. Basically, what we're likely seeing right now is what's called a short squeeze, and this is where whales are going to be hunting stop losses. Right now, anyone that's taking short trades, like anyone that took a short trade in this area, likely put their stop loss somewhere around this area. They did this because if the price goes too high, it's going to liquidate them and kind of minimize their risk. It's a style of risk management here. But what whales will sometimes do is find that level of stop loss. And if they cross that, if they get the price to cross that level, it means that all of the short traders that took trades down here are going to be liquidated, and there is no more downwards pressure in the market for the price to deal with. With the increased buying pressure and any of the selling pressure just completely gone out of the market, this creates potential for a massive move up. It's kind of like if you were to hold the brakes down on your car and accelerate. So your engine's revving and revving and revving and revving like crazy, but when you let go of the brakes, you're going to skid and just go like crazy. And that's kind of what we're seeing with the price right now. This is further confirmed using the TC top and bottom finder. And what you're seeing right here, this red zone that the price is currently in, is full of that short trade liquidity. So as the price is rising up, it shows the wider that this area is, the more short trade liquidity there is. This shows that there's a ton of short trade liquidity in the current price area. And because of this, because we're seeing a possible stop loss hunt right here, that's just a further confirmation of a possible short squeeze to the upside. Now, another thing I want you to take a look at here is the SPY, the S&P 500. 3 days ago, we tested structure resistance right here. This is a descending structure that we have seen literally since the beginning of the bear market. It has touched multiple times, but has not yet broken through. Now, we touched that again 2 days ago on January 23rd right here. Next day, the market open was lower than the close, but it shot back up to meet the close of the previous candle. And this happened again with the opening being much lower than the previous close. But again, the price shot up and went back to the previous candle close. So we have 3 candles right in a row right here. This is showing that buyers are really wanting and really actively testing this descending resistance line. If we do get a candle that manages to break above this, a new candle opens and then closes above this, that is considered a breakout of this descending resistance line and would be majorly bullish for the S&P 500. And where the stock market goes, Bitcoin is going to follow. Where Bitcoin goes, the rest of the crypto market is going to go too. Essentially what this means, if we manage to break above this descending resistance and move up to about 405, there's pretty much nothing stopping us from getting all the way to 410 on the S&P 500 right here. If we somehow manage to break that over the next few days, the stock market does move a little bit slower, so it'll probably take a week or so for this to happen. If it does, we could very easily see 430 on the S&P 500, as that's the next structure resistance to look out for. This would be an insane move up for the stock market, and this would be an even crazier move up for Bitcoin. Where the move up is going right now, I would not be shocked to see 24,305 or even as high as $25,200. Anywhere in this zone would not be unlikely for Bitcoin in the short term, especially as the price begins moving up. Currently, really the only structural resistances are in this zone right now. So that's the area that I'm paying attention to find structural resistances for Bitcoin at this point, because we have broken right here. I'm going to call this support now, right here. The $22,800 structure support. This right here, $22,800 structure support, is about the place where we were seeing those stop losses placed. And again, we are just skyrocketing past that. So with that, 24,000 at least, possibly as high as 25,000 for a maximum, at least in the short term as of the current price, about a just under 9% move up, 8.5% move up. Now, at this point, a lot of traders are going to be in a dilemma if they want to FOMO in and not miss out on this move up. A lot of traders are going to be trying to do that. So as the price moves up and we reach this $24,000 or even $25,000 level, what we're going to be looking for is a sell signal right here. And when we get a sell signal along with the price versus well money flow and trend exhaustion high on their charts, that's when we're looking for those moves down in the market. And that could be a good place to take profit. I do want to clarify with you that buying into the market at this point is extremely risky. This is because most often as whales pump the market, they're going to be taking profit sooner or later. So it's just kind of a risk whether or not they're going to be taking profit now or farther up here. If they decide to take profit now and shoot the price down, you will want to have your risk managed. And this is how you do that. If you're using the TC top and bottom finder, click show market order, show buy limit 1, and show buy limit 2. In your investment, and this is not financial advice, what you could do is actually split it into 3 separate parts, separate and equal parts. The first, you would market order in. The first part right there, buy in at 23,393. And their second part and third part are actually going to be split between 2 buy limits. The first one would be at $18,000 and the second would be at $12,888. Essentially what this means is if the price does drop from here, you FOMO in, you buy, and the price drops, oh man, you've lost money. But that's okay, because if the price drops below $18,000, you will have significantly lowered your break-even point. So if the price drops, this means that your break-even is now around here. The price will no longer have to jump like crazy in order for you to be in profit. It'll only have to be a little bit of a move up before you're in profit and break-even. And if the price drops even farther, this just lowers your break-even even more. This is the strategy we use to win 126 wins in a row, 126 wins in a row in the bull market. And it looks like we could actually be seeing a bull market takeover at this point. So this is a great risk management strategy. Again, not financial advice. Do your own research and invest. And all of your investment decisions are your own. This is just how we like to do it. No matter what happens at this point, we are going to be using these indicators. Again, the TC top and bottom finder, price versus well money flow, and trend exhaustion for our trading. If you want to get access and follow along with us with live data, these indicators are crushing it in this market. I would highly recommend checking out the indicators at the links in the description. And once you click that link, it'll bring you to the indicator page right here. The best possible deal here is the Pro Trader Bundle. It is 70% off all 11 indicators here. If you bought all of these 11 individually, it would total over $2,000. So just grab the Pro Trader Bundle, get 70% off. It is a major savings. With this bundle pack, you get the TC top and bottom finder, trend exhaustion, and price versus well money flow indicators you just saw me use, as well as 8 other indicators from Trade Confident. Again, links below. Once you're here, just click this link right here and you are good to go. With that, trade safe, trade confident, and I'll see you in the next video.